This is our fourth session in our topic on cash flow and profitability. It's very important that every business pay attention to their cash flow and make sure as your business grows and develops that it remains profitable and preferably increasingly profitable. In our sessions prior to this, we've talked about the critical reports that you need as a business owner to manage your business. And just as a quick review, those reports include your profit and loss statement, your balance sheet, your cash status report, your aging report, and for many businesses, they need a job profitability or project profitability report. That may not be relevant for your business, that fifth report, but the first four certainly are. And so you want to make sure you've got good bookkeeping, good accounting, and good reports so that you can make good financial decisions. And we talked about how important it is to do some comparisons. Compare your reports to your goals. Compare your reports this month to last month. Compare your reports this year to date to last year to date, or last year this month. So making comparisons help you measure the progress you're making. Setting goals help you understand your targets and where you're trying to get to. When it comes to cash flow, though, I talk to business owners all the time, and many times all they're thinking about is, I just want to make sure I've got enough money in the bank to pay my bills, to make payroll. That's always a big issue if you have employees. And hopefully, I got some money left over for me. And many times they do, sometimes they don't. But I want you to think in a little bigger perspective today. I want you to think about 7 cash flow goals that you should have for your business. And you're not going to accomplish all these goals immediately. These are goals you accomplish over time, hopefully sooner than later, but it's going to take some time to accomplish these goals. And I want to just give them to you. I want to walk through them with you, and you can adjust or you can measure where you are. Have you accomplished goal 1? If you have, work on goal 2. If you've accomplished that, work on goal 3, and so forth. So let me go over these goals with you. But before we do, let me just remind you of a quote that I really like. It's been said that you can operate a long time without profit, but you can't survive a day without cash. Cash is king. You've got to have cash to survive. And so these are cash flow goals so that you are assured that you have the adequate cash you need to sustain yourself and to grow your business. So cash flow goal number 1 is positive monthly cash flow with all taxes and payables current. It's interesting to me, I talk to business owners who've been in business sometimes for several years, and they are either behind on their taxes or they don't stay current on their taxes. It's real important that you stay current and you keep those things up to date. You want to make sure your payables are current because you need vendors and outsiders to trust you. And you want to make sure your taxes and your payables stay current and you've got positive cash flow. You don't want to be every month borrowing from Peter to pay Paul. So that's the first thing. You want to establish a consistent track record of positive monthly cash flow with all taxes and payables current. The second goal, once you've established a good track record of that, you only need a few months to assure that you can maintain that. Once you do that, you want to move on to goal number 2, which is what I call proper owner compensation. Many times business owners, they're just trying to pay bills and trying to make sure they make ends meet, and they hope there's something left over for them. And the truth is, you didn't go into business to live that way, I don't think. Most people don't. We go into business to make money, to provide for ourselves, for our families. If we have employees, to provide for our employees and their families. But you as the owner, you ought to be compensated for the work you're doing. And oftentimes we think of ourselves last, but I want you to start thinking of yourself as an integral part of the business and thinking about a budget. Creating a budget for your business where your compensation is a part of that budget so you can predict every month you're going to receive a certain amount of salary or compensation. Now, you may want to talk to your CPA in terms of tax advantages, depending on how you've got your entity structured, whether it's an LLC or an S Corp. Most small businesses don't go the C Corp route, but some do. Or if you're a sole proprietor, which I don't recommend you do, I recommend you talk with a good a CPA who can advise you on that. So you may want to set up your salary so you have a smaller amount as salary and then a draw or a dividend at the end of the month and take it out that way for tax purposes. But work that out with your CPA to your tax advantage. But make sure you are receiving the proper compensation that you should receive as a business owner. That's the second goal. Once you achieve that, then the third goal is 2 to 3 weeks operating capital in reserve. Sometimes business owners say, I want to have 1 or 2 payrolls in the bank as operating capital reserve. But you need some reserve because emergencies are going to happen. And you want to have some money there to cover those emergencies. And so I recommend 2 to 3 weeks operating capital in reserve. And you might even create your own company savings account where you set that aside. But that's the third goal. The fourth goal is debt elimination on all non-appreciating purchases. Now, there's some things you buy for your business that are going to appreciate in value. For example, if you buy property, most of the time real estate appreciates in value. There are some things that are going to appreciate in value, and that's fine. They're investment opportunities for you. But most of the debt most businesses incur are non-appreciating things like credit card debt, debt on depreciating items like equipment, vehicles, things like that. And ideally, you ought to try to get yourself to a place where you can do much of that or most of that with cash. Now, you may want to leverage a bank or notes to if you're dealing with lots of equipment and it makes sense. So again, that's a judgment call for you. But the main thing is you don't want to be carrying a lot of debt as a business. And so goal number 4 is debt elimination as much as possible, as reasonably possible. And the debt elimination is typically stuff you've accumulated from the early stages of your business, or many times we're using credit cards to finance some of our business operations, which, again, if you get to a good cash flow position, you're able to build some reserves, you can eliminate that debt, and you don't even have to use it. So goal 4 is debt elimination. Goal number 5 is 2 to 3 months operating capital in reserve. Now, goal 3 was 2 to 3 weeks operating capital. Now you're at a place where your business is stronger, you've got more to work with, and so goal 5 is 2 to 3 months, 60 to 90 days operating capital in reserve. If you get to that place, you have a very strong cash position, and you really don't have to worry about cash typically at all. Goal number 6 is desired capital investment or expansion. It may be that you're at a place where you want to add a new department or a new division to your business, and you're going to have to hire some staff before they're really generating revenue for you. And so that's going to be an investment, and you want to have money to do that without taking undue risk or going into debt. And so that's something to consider. Maybe you want to buy certain equipment, pieces of equipment, or upgrade some of your equipment or tools or whatever you use in your business. So goal number 6 is desired capital investment and expansion. And then goal number 7 is owner shareholder dividends. Ultimately, you want to be making a good wage as a business owner and still seeing 15 to 20% profit in your business. And that is a powerful place to be and a good, strong place to be as a business owner. So as I'm working with clients, that's where I'm trying to get them to. Typically, they're wanting to have around a 50% gross profit and at least a 15% net profit after proper owner compensation. So make those your goals and work toward those. Figure out where you are today and what the next goal is for you to pursue.